everyone, welcome to Trading Hour on CNBC-TV18. I'm Ekta Batra and with me is Prashant Nair. Well, it's turning out to be a session where we are definitely seeing a lot of weakness in the market. So, for example, we have the Nifty, which is down around 0.7%. We have the Midcap index, which is in fact starkly underperforming, along with the Bank Nifty, starkly underperforming for the Midcap index on a week-to-date basis as compared to the Nifty. So, the Midcap index has already lost around 3% on a week-to-date basis versus the Nifty, which is down around 0.4%. Today, there's an underperformance for the Indian markets as compared to the globe as well. Most of Asia is in the red. We had the Dow, which was higher, but not managing to sustain for our markets. A lot of stocks in focus. So, for example, ACC came up for you reacting to its numbers separately. A lot from the mid-cap IT space, such as the likes of Saskin, L&T, Infotech, Ciant, all of those stocks in focus. And something like a Talwakers, where the management did clarify there's no pledge shares which have been sold in the market as of now, and more clarifications in terms of the debt figures which came in from the company. Reliance, Interglobe, as well as Dabur in focus on numbers today.
Ekta, hi, morning. What makes it doubly troubling in some senses and disappointing in some senses is the fact that Asia is doing all good. I mean, you look at Asian markets across the board. I think when I last checked, India was the only market which was down and down sharply. Look at the other markets. China is up 1, Hang Seng is up 1, Nikkei is up about 2%. I mean, Nikkei fell about 1.5% yesterday as well. Taiwan, Straits, Kospi. I mean, there is a wave of green across Asian markets. And which is the one market which is down? It's India. So, we're down about 0.7% or so. And generally speaking, I mean, what was looking like a week which would recoup some of last week's losses. I mean, last week the market lost about 2.5%. Until about Wednesday, it was looking like, we were up about 1.5%. But the last 2 days, basically just a complete washout. And now for the week, that is Friday to Friday, I mean, we're down about 0.5% or so. Over the last 3 weeks, the Nifty has lost about 500 points, approximately, just under 500 maybe. It's looking very, very tough. And I just kind of sort of go back to what the point we were making when we started this week. I remember on Monday that the local looks very, very tough. I mean, the local factors and, be it sentiment, earnings, everything, that looks kind of poor and tough. Whereas it's the global sentiment, which should sort of come in and support. But I think for the second week running now, it's the local which has trumped whatever is happening on the global front. Just a quick word, and we'll sort of pick this up with a guest later on the show. Overnight, the commentary which we've got from Fed officials, which is the New York Fed president and the vice chair of the Federal Reserve, both of them, I think many people, economists, global economists have changed their view to now expecting not a 25 basis point, but a 50 basis point cut from the Fed in July itself. So, and I think that is the reason why you're seeing so much green across other regions, but it's kind of failing to completely show up in any way whatsoever in India. Market breadth is 4:1 in favor of declines. So it got about 1,230 stocks lower and about, 350 stocks higher on my screen, and I'm looking at only the more active part of the market. But the overall market breadth is on your screen, and it's very, very poor. Ekta.
Okay, well, let's get talking about the technicals of the market now, and let's see whether there is any sort of recovery in store. Kiran Jadhav joins in to discuss that today. Kiran, hi, over to you. What's your recommendation for the Nifty, which is just about holding at around 11,500 now?
Well, very good morning. Before we really come to the stock-specific activity, I would just like to point a few technical parameters on the basis of whatever discussion was going on right between both of you all. So, the Nifty is currently at a very crucial level. 11,500 is a very crucial level. I'll give you the reasons why. See, October 2018, we made a low. After that, we made a higher bottom in the month of February 2019. A third higher bottom in the month of May 2019, and if you connect these three bottoms with the trend line, the value today comes at around 11,500. So a close below that would really be a very bad news for the bulls and a good news for the bears. Looking at the option chain data, we believe that we are heading towards 11,300, 11,200 with July expiry itself. So today's close is very crucial. If that happens, I'm pretty sure we are going to head towards 11,200 by next Thursday. So coming back with the stocks which are actually vulnerable to this move are Eicher Motors, which I have a sell recommendation on. 18,350 would be my stop loss, and target would be 17,530 in the next 2 days. Bajaj Finance has basically cracked an important bottom, the last swing bottom that it had. So I have a strong sell call. My sell call that was given when 15 minutes back was a pretty higher level, and now the stock has plummeted even down further. So my trailing stop loss for now would be 33.60, and I would have a target of 32.50 for today and 31.70, which should be happening on Monday or Tuesday.
Okay. Just a quick question. Thanks for those trades, Kiran. Maruti, just put the stock up, the daily chart up, and I was sort of looking at the same pattern yesterday as well. It's broken 5,800, 57.93 now, and it's kind of, there's a downward sloping trend line. The touch points start at I think the October 2018. There is another one in January of 2019, and we've broken that today. I think. It was around the 5,800 mark. Your thoughts here, Kiran? Will this hold around the 5,800 level, or we are looking at sharply lower levels?
I think we are heading towards deep down levels. The technical patterns that I see in Maruti would be at around the 4,800 kind of levels, which should be tested in a month's time from now. So we are going to see big pain in auto sector counters, and Maruti would be leading from the front.
Okay, just before we let you go, I wanted a chart check on Amara Raja and the kind of decline we've seen today on that stock.
Yeah, Amara Raja, the next support level that I can see is at around the 600 mark, very important support. And if this is cracked on the day-end closing basis, then we would be heading towards the 340, 345 kind of levels, which is the next support level.
Okay, all right, Kiran, we're going to let you go on that note. Thanks very much for joining in and bringing us all of that perspective on the technicals. Well, we have a lot of stocks in focus, and the one which stands out is ACC, which is trading higher on the back of what was a good set of numbers last evening. Sonal Bhutra joins in with all of the highlights today. She's filling in for Nigel. Sonal, over to you.
Yes, absolutely. Very strong set of numbers. It was the EBITDA per ton that actually surprised on the positive side at a 7-year high. So quickly running you through the numbers. Well, revenues, they increased by 8% to 4150 crores. We were working with a poll of 3900 crore rupees. That was the actual surprise was the calculated EBITDA per ton, which increased 26% on a YY basis and 54% sequentially. It came at 1090 rupees per ton, and it is highest in last 7 years. Margins also a big improvement on a YY basis. They came in at 18.9% versus a poll of 17.7%. Profits were also higher by 39%. That is because the other income was higher. Also, the finance costs were low. So brokerages, they have given a thumbs up to the numbers. CLSA, in fact, has gone ahead and increased the target price of the stock to 2050 from 2,000 rupees per share. They say that they have also raised the EPS forecast by around 3 to 4%, and pricing from now on is something that will be key monitorable according to them. Nomura has a neutral rating, however, with a target price of 750 rupees per share. They say that more price cuts and discounts are likely because right now the demand is very weak. However, they say that going ahead, they expect cement cycle to be on an up move. Moving on, Citi, they have a buy rating on ACC with a target price of 2175 rupees per share. They say that volumes and pricing were higher, but they were offset by higher cost. So cost is also an important monitorable going ahead according to them. But overall, the numbers are very strong.
Okay, Sonal, thanks very much for taking us through that. Appreciate you joining in. Rallis India also reported a good set of first quarter results. And let's get the highlights from Sonal again in terms of what stands out. Stocks up 5.5 in what is a pretty weak market. Sonal.
Well, absolutely, Prashant. Well, quarter 1 and quarter 2 are seasonally strong quarters for Rallis. They account for 85% of the total revenues of the company. And in a seasonally strong quarter, they have done very well. Well, the revenues are up around 9%. EBITDA has also come in at 95 crore rupees versus 83 crores earlier. A lot of improvement in the operating profit margins also. They have improved by almost 80 basis points on a YOY basis. Profits also have increased to 67 crores versus 54 crore last year. The management commentary is also very positive on the international international business. They said that the growth came in from international business. They expect it to continue. And also the seed business grew around 2.5%. That was driven by different crops. The growth in the international business was around 12%. However, they are seeing some pressure in the domestic crop protection business because of the challenging conditions. So this is a key monitorable for them going ahead. However, they expect the strength in the international business to continue. Back to you.
Okay, all right, Sonal. Thanks very much for that. So that's on Rallis, up around 5%. Some positive news, in fact, coming in on Dr. Reddy's, where they've launched the brand equivalent of Allegra, which is everybody knows Allegra, and you know the fact that it's an anti-allergy tablet, and it is available over the counter in the US, so you can go and buy it from a chemist directly. You don't need a prescription for it. So they have launched the equivalent of it in the US markets. The market size is around $44 million. Remember that there are a whole host of anti-allergy tablets which are available in the market, but they've said that this is the store brand equivalent of Allegra D, which Dr. Reddy's has launched in the US. So maybe there could be some amount of momentum on account of that.
You know, just a quick word on the market. We're down 100 plus points now. So I think there is a fresh leg down which is underway, and we're at the day's low. I mean, and I think it's true for the Bank Nifty, which is also cracking. Maybe we could just quickly look at what's moving on the Nifty, and then we sort of move on with more stocks in terms of specific action which we're seeing based on results, etc. But there you go. HDFC, Bajaj Finance. Bajaj Finance, I mean, bulk of the correction has happened in the last, half hour or so. HDFC Bank is cracking. Infosys is cracking, and there's a bunch of others. I mean, on the upside, TCS is holding on a little bit, NTPC tightened, but I mean, far and few in between. It's a triple-digit loss now. Yesterday also, I mean, at one point we were down 100, but then by close the market pulled back up, and I think we ended down about 79, 80 points. But today, early on, there is that 100-point cut which is underway. Ekta.
Okay, yes, absolutely. So the market's trending lower as we speak. In fact, has broken 11,500 for the Nifty at this point. So that's flashing on your screen. From the Midcap IT space, we in fact had Cient, which has hit a fresh 52-week low on the back of what was a very dismal quarter, while L&T Infotech has also, the numbers were largely in line, but the stock is lower. The conference call is beginning at 11 a.m. Rima joins in with an analysis. Rima.
Yes, the spate of weak earnings from Midcap IT continues. Let me start with Cient, which was a howler. In fact, the stock is now at a fresh 52-week low, having declined 20% in 2019. The problem is on the top line. There is just no revenue growth. Revenues have fallen by 5.2% on a quarter-on-quarter basis. This is the third quarter in the last 5 years where we have seen a sequential revenue decline. Look at the way the year-on-year revenue growth has moderated. 5 or 6 quarters ago, it was in mid-teens. It was a 16.7% growth in Q4 of FY18, and this quarter it's actually a negative growth of 2.6%. The company has discontinued its FY20 revenue guidance, though they continue to say that we will see a double-digit growth in EBIT for FY20. But Morgan Stanley says that, you know, for FY20 we're expecting a flattish growth, but they're actually expecting EBIT to decline by 2 to 3% despite the management guiding for a double-digit growth. So they've lowered their estimates. They've cut the target price to 620. The picture is a little better for L&T Infotech in terms of at least operationally the numbers were in line, but even over here the growth slowdown is very apparent. So this time around it's a constant currency revenue growth of close to about 1%. Again, 4 quarters ago we were talking about a revenue growth in the 20s for L&T Infotech. That has slowed down to 12.9%. There is weakness in the top line, which was known, but the problem is that even manufacturing as a vertical has declined for the company, and attrition is a problem, having increased to 18.3%. So Ambit says that the top line issue, which of course the company had highlighted in the conference call, that has bottomed out, the revenue decline over there, but they don't see growth picking up for this particular client. Beyond the top line, they expect a few more challenges to come to the fore coming second quarter onwards, which is why they also have lowered their EPS estimates by 2 to 6%. They continue to remain buyers, and now they're saying that we hope the company can at least deliver a double-digit growth versus the company's earlier guidance of growth in the leadership quadrant.
Rima, thank you very much. There's a 3.6% cut which is coming through on L&T Infotech. Well, the market's down 110 and there is a little by way of recovery I mean, actually, there is nothing. It's just one way, seems one way. Just put up Bajaj Finance. I mean, on July futures, it's down 5 1/3% now. 32.93 is where the cut is coming through at. That's a 180 rupee cut, 183 rupee cut on Bajaj Finance. I mean, actually, it's the consumer names which are all selling off. I mean, look at Maruti. There is Bajaj Finance. I mean, a bunch of other auto stocks which are correcting, some consumer stuff which is slipping. So that part of the market looking pretty weak. Indigo, which reports today, is holding on, but it's just 0.5% or so, and it's off the highs already at about 14.73 or so. We slip into our first break here on Trading Hour. We come back and we discuss what's happening with the oil prices, which have dropped another leg. My colleague Manisha Gupta is going to be in, and she'll speak with Azleen Ahmed of Argus Media on oil prices. Back in 2.
Hyundai Kona Electric presents Headlines of the Day.